Bitcoin fairly hoarded the spotlight in 2021 as costs took off to record levels, first crushing the 60K mark, then at that point mobilizing a second opportunity to go past 68K in November. At this stage in the game, Bitcoin has pretty much shaken off its standing as an unsafe or elective speculation choice, as an ever-increasing number of large companies and monetary foundations are currently including BTC as a pillar of their drawn-out venture procedures. It appears to be that in spite of further developed coins being sent off with always complex blockchain capacities, the first cryptographic money actually overwhelms the market regardless of not having a similar potential as second and third-age coins like Ethereum and Cardano. So for what reason are huge names in the money business rushing to put resources into Bitcoin and the accompanying Bitcoin cost expectation for 2025 and 2030? Well, investigate huge business thought process of the Symbolic's future potential, as well as consider how BTC has what it takes against rival coins with regards to lifespan at last. Well, likewise consider specialized examination from driving crypto stages to create our own Bitcoin cost expectation. Bitcoin, the first cryptographic money. It very well may be contended that Bitcoin's strength pretty much boils down to the way that it was the principal truly suitable cryptographic money to be created, in spite of its overall fairly dated with regards to specialized specifics. Yet the time any semblance of Ethereum and Cardano showed up on the scene, BTC just stood firm on areas of strength for two-footing as the market chief made by the secretive Satoshi Nakamoto back in 2009. Bitcoin tried to change the universe of money by offering a solid decentralized distributed computerized installment framework that eliminated the requirement for a bank or monetary foundation to check exchanges. Bitcoin was made potential on account of its fundamental blockchain innovation. Well, the idea had existed for quite a long time before Nakamoto's white paper. It was truly Bitcoin that placed the innovation on the guide. As the name proposes, blockchain comprises of information blocks which are checked and included by free PCS, the organization. This component is fueled by Bitcoin excavators, strong PCS that tackle complex conditions to finish exchanges and thusly are compensated with BTC. Bitcoin's engineering is in any case substantially more restricted than numerous that of some later cryptographic forms of money. And throughout the long term, numerous Bitcoin cost forecasts have anticipated that BTC should ultimately bring down. Nonetheless, at the hour of that is never verged on being a reality, notwithstanding numerous cryptographic forms of money showing up further developed on paper. Bitcoin keeps on being the norm against which any remaining tokens are estimated. Anybody who has recently explored whether to put resources into Bitcoin will likely currently know that it is likewise a significant mark of financial backer feeling for the more extensive market. On the off chance that Bitcoin goes up, it frequently has a thumb-on impact for the top altcoins, regardless of whether are thinking about whether to put resources into Bitcoin. Yaud must have been hiding away not to know about its unbelievable cost run all through the principal quarter of 2021. As a matter of fact, Bitcoin has not gone over 7 days without showing up in standard news all over the planet. 2021 was quite a year for BTC, having a sensibly frustrating 2020 following the coronavirus pandemic, which saw costs sink from a high of 10,000 to simply more than 3,800. Bitcoin started to recuperate towards the year's end and encountered a noteworthy bull in December that saw costs hit 20,000. Numerous experts then at that point anticipated that BTC should even out, yet the bull went on into 2021, with BTC first coming to the 30,000 achievement in January prior to cresting at 40,500 only a couple of days after the fact. The rest of the month was somewhat more turbulent and ultimately saw Bitcoin costs drop back to around the 30K mark. Yet again, numerous Bitcoin cost forecasts must be re-evaluated after Bitcoin's introduction to obscure domain yet again, following a short slump which saw those dreading they had passed up the cost flood race to put resources into Bitcoin. Things got again in February and BTC broke its own record by raging past 50K to reach 54,181 on the 22-1 more short slump followed before Bitcoin by and by revitalized, cresting at an extraordinary all-time high of 68,300 in November 2021. Is the Bitcoin Air pocket going to explode. Bitcoin's brilliant cost increment has unavoidably provoked hypothesis that the digital money is in an air pocket that might be going to explode. Nouriel Rabini, a financial aspects teacher at the Harsh Institute of Business, NIU, has highlighted the past Bitcoin air pocket of 2017-18, when costs flooded from 1,000 to 20,000, prior to drooping back to 3,000. He has likewise guaranteed that digital money by and large is just a play on a theoretical resource bubble, more regrettable than tulip craziness, as blossoms had nevertheless have utility. Its store of significant worth against stale chances is doubtful. Furthermore, more terrible, some cryptos named shitcoins are monetary tricks in any case, or degraded day to day by their support in any case. One thing that Mr. Rabini neglects to recognize is that while the 2017 Bitcoin bubble was generally driven by more modest financial backers who were catching wind of the staggering value execution of BTC, interestingly, this most recent buyer market has been to a great extent driven by institutional financial backers. Premium from institutional financial backers, for the most part, implies Bitcoin is exchanging a lot higher volumes and with bigger financial backers considerably more prone to hold their tokens over a more extended period, implying that the coursing supply of BTC decreases, and in principle costs are bound to increment. Retail financial backers were either less engaged with this meeting, or if nothing else have so far kept their Bitcoin on trades, while enormous financial backers expanded purchasing and taking their Bitcoin into their own care, as per a Chainalysis report. Basically, this implies that the most recent BTC cost rally is undeniably more steady, contrasted with those before. Does Bitcoin actually have the ability to develop one significant and frequently ignored thought for any Bitcoin cost expectation? Is the rising consideration being paid to the power utilization of digital currencies? Bitcoin utilizes more power per exchange than some other technique in the world. Bill Doors said it's anything but an extraordinary environment thing. He added, the mining expected to keep up with the Bitcoin network requires enormous measures of energy, more so than the world's significant tech organizations that give amusement administrations, including Netflix, Apple, Facebook, Microsoft and Google consolidated, all of which additionally require serious measures of energy to run their foundation. Numerous pundits are currently saying the power utilization from Bitcoin has hard to legitimize, considering that many driving monetary figures including Warren Smorgasbord have considered BTC to have no inborn worth. So how might this all affect future Bitcoin cost expectations? Anybody hoping to put resources into Bitcoin at this stage should know about its ecological effect as large business economies and foundation move to carbon unbiased tasks. Bitcoin's power utilization might well end up being its weak spot, particularly as other cryptos are as of now looking to address this as a key versatility issue. All that we have examined so far ought to be thought about while wanting to put resources into Bitcoin. Nonetheless,